What's up, everyone? It's Caddy with Money Investing. So, a pretty brutal week for the markets. We had the NASDAQ selling off here on the day, down a little bit over 1.69%. The S&P 500 closing in below 4,000, down 1%. And the Dow Jones also dropping 1% on the day. All three indices were down on the week. And we are kind of coming off a pretty significant rally over the last 5 to 6 weeks. And all on the back of a very, very strong inflation data, and something that we did talk about in our previous market updates. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time, and the link to our Discord and Patreon is going to be down below. If you're interested in joining us, we took another hedge on advanced micro devices, and that's already up close to 27% just after one day. And Tesla calls are also printing right now. They're up 56% right now, up a little bit over $2,300. But I'm looking for another 40% move to the upside on these calls. Pretty much these calls should be worthless if Tesla can drop another 10 to 15%. So that's why it's a hedge, right? If Tesla continues to sell off, if we see another 10% or 5 to 10% pullback on Tesla, it comes down to 170s or 180s, that would be fantastic for these call options, as they'll get further out of the money. And hopefully they'll get up to over 90% profitability, at which point I will look to close this entire contract and bring in close to $4,000. So again, if you want to access all these options alerts, trade ideas, swing trading ideas, and investing alerts, and private videos, and all the Discord channels that are available for all the members, links are going to be down below if you're interested in joining us. So this right here was the personal income and outlays. So personal income grew 0.6% month over month, but PCE month over month was up 0.6%, which came in very, very hot compared to the consensus of 0.4%. And not only that, we had core PCE jumping over 0.6% month over month, also coming in much hotter than what the expectations were at 0.4%. And to make matters worse, year over year numbers not only came in well above the expectations, they came in well above the previous numbers as well. So we came in at 5.4% for that PCE number year over year versus 4.9, that was a consensus, and 5.3, that was a previous number, and 4.7% was the core year over year, coming in ahead of 4.3 and 4.6, which was the previous number. So all in all, not super great inflation numbers, and interest rate projections also flipping a little bit. Now, last time I checked, there was a 10% probability for us to see 6% as a terminal rate by July. And that number's creeped up from low 3 percentage points to over 10%. And now the market's not pricing in any more cuts in 2023. We're now very much aligned with the terminal rate at least getting up to over 5.5%. And in other words, for us to see another 75 basis point hike remainder of 2023, at which point the Federal Reserve is expected to pause and keep rates higher for longer. So stocks closed lower Friday after hot inflation report. Major averages log worst week in 2023, and that is correct. We had a pretty brutal week here. The Dow Jones fell 336 points, S&P dropped 1%, NASDAQ slid 1.7%, and we were down on the week as well, with the S&P down 2.7%, marking its worst week since December 9th. The Dow fell 3%, almost 3%, for the fourth straight losing week, and the NASDAQ closed 3.3% lower, notching its second negative week in 3. So, we've already talked about it again, and I don't want to repeat myself over and over, but if you've been a part of our money investing community, if you've been a part of our channel here and our Discord, and again, this is not a way to flex or anything, but I think our community, I'm very proud of our community, because the way we kind of connect the dots, even in our chat, in our Discord, with the research that we share, and the way that we're connecting the dots with respect to the risk and reward from a more macro perspective, I think there's not very few communities that can do that out there. And again, if you kind of be a part of our money investing community, you'll see yourself the amount of research that's shared, the amount of ideas that are shared, the amount of perspective, and it just kind of brings it all together. And we understand risk reward, much better at the moment right now, because after 5 consecutive weeks of the NASDAQ pushing higher, it was very, very obvious. It was very clear. And yes, you don't get the perfect response in the comments if you're suggesting for a pullback or a down week or a red week. You don't, because you're not saying what people want to hear, right? You're saying what you think is going to potentially happen. You're giving your objective opinion, and that may not come across as very, very appealing, right? That's not what people want to hear. If I tell somebody that, look, this week you might see a pullback or valuations are stretched or we are coming up to overbought, over extended conditions, people don't want to hear that. People want to hear, like, when are we going up higher even more? When is that going to rally, then to continue to new heights? And I'm not saying that it's not going to happen, but it's just going to take time, right? You don't expect the markets, NASDAQ specifically, to rally 50%, go back to all-time highs in a matter of 2 months, right? That's just not how the markets work. We happen in waves, right? So we push higher, we pull back, we push higher even more, we pull back. So we have to understand that and kind of tie that in with our own decision making, our own analysis, and see where we are with our portfolios. So that being said, I mean, Liz Ann Saunders, basically chief strategist at Charles Schwab, believes there is more the market's downturn besides the PCE number. She says, and I quote, another reason why the market is having trouble to some degree, I think, is not just about inflation being hotter or concerns that the Fed has to stay tighter for longer, but there was just a lot of speculation that kicked back in, speculative froth, and the market tends to move in a contrarian fashion when sentiment gets a little too frothy. So I think some of the move has to do with sentiment, not just these macro factors. And I had to include this here because I could not agree more with this statement. I've kind of mentioned sentiment so many times in the last few weeks because sentiment was really what's driving the markets higher. We saw a lot of short squeezes. We saw a lot of individual stocks pushing up, 10, 20, 30, 40, 50%. And there was a big disconnect between what the reality of the situation is and the sentiment itself. I think the last couple of weeks and this week specifically, we've seen the market kind of get in sync with the reality a little bit, right? With the interest rate, so Fed funds futures now pricing in for 75 basis point hikes, no cuts, and even a probability of a 10%, a probability of a 6% terminal rate, so that's a 10% probability there. I think we, to some degree, got our reality check this week, which was very much needed to bring this froth back down a little bit, to bring this speculation back down. So in other words, this week was a little bit of a reality check for the market. Now, moving forward, key Fed inflation measure rose 0.6% in January, more than expected. So we've already gone over that. We don't need to go over that again. But Matt Perrin, Director of Research at Janus Henderson Investors, says, and I quote, this morning strong inflation data continued the recent spate of market unfriendly news. And this could keep the policy rate higher for longer than the market had hoped, which in turn will likely pressure earnings. While we do see signs that inflation will eventually moderate, higher rates for longer will take a toll on the markets as well. Mark Zuckerberg also announcing Meta's new language model as AI race heats up. So there's another artificial intelligence enabled search engine platform potentially coming up from Mark Zuckerberg and Meta. So just wanted to bring that up. And this right here was the state of the market. While you ponder on this heat map, I'm just going to drink a sip of water so I don't cough crazily. So Tesla down 2.5%, and that's good for our covered calls. That's a hedge. So another 4 or 5% drop here is going to really, really work out for us as a potential hedge. That's exactly why I've mentioned that if the markets are pushing higher, they're getting up to extreme levels, valuations are going higher, we're becoming overbought. Either consider taking some profits off the table so you're not over allocated in certain positions, or you can potentially create a hedge by selling covered calls, having zero cost collars, whatever it is that you do to potentially hedge your portfolio from potential downside, because protection is also really important, right? Protection, you need to protect your portfolio so that you're not overexposed to any position, you're not overexposed to any market environment. And that's exactly what we're doing also, trying to come up with strategies, trying to come up with ideas that can help protect our portfolio. So Amazon down 2.5%, Google down 1.8%, AMD down 2%, another few percentage points for AMD, and that call should really rally up to 50-60%. Adobe was down quite a bit, so I will be doing an additional analysis on Adobe very soon when the time comes. We'll definitely be looking into this stock. Microsoft selling off, Apple down. So most of tech was down. It was all sectors pretty much, all 11 sectors except for energy, which was like slightly higher. But all 11 sectors in the S&P 500 down on the day, on the week, and on the month. Technology is the only one that's slightly higher, but this has been a pretty brutal red day and a red week for the markets. Now, in terms of futures, gas prices and natural gas getting a little bit of a rebound. Orange juice for the win, up over 4%. And then we've got copper, silver, sugar, platinum, wheat, all of them selling off. And Bitcoin also struggling, now down to low 23,000s, and Ethereum also in the low 1600s at the moment. So going over to the VIX, up over 2.5%, not a whole lot. It was actually much higher during the day, trading all the way up to 23 levels, and then got sold off a little bit, but we're still up 2.5% here on the day. With crude oil, once again, seeing a lot of buyers to step in. It got down to as low as about $74 per barrel, and once again, we're seeing buyers step in, so it's green on the day and seeing some momentum back to the upside. Bitcoin, unfortunately, getting rejected at this resistance. So this is what we have talked about in our previous videos. So very strong resistance at 25K. And then we've also got Ethereum sitting at just about 1,600. That's going to be in line with this resistance as well for Ethereum. Now, talking about S&P 500 and the NASDAQ, and excuse me here. Just crazy. So this right here is going to be the NASDAQ, or no, the S&P 500's chart. Now, it does seem like we are starting to break down a little bit. So we're certainly starting to break below this higher low. But we're still sitting on that 200 simple moving average, right? So that 200 SMA sitting at 39.40 is going to be very, very important level to watch. And it was quite an interesting day for the S&P because we were much lower. Like, had we not closed at all the way down here, I mean, the S&P was down almost 1.75% at one point during the day, and the buyers did step in. However, we were still gapped down so heavily that we weren't able to, close at a higher level, right? Close green, so to speak. So a very, very significant candle here, suggesting a lot of indecision. Still down 1%, so 39.70. So even though we are starting to break down below this higher low, what's going to be interesting is that whether we kind of hold up that 200 SMA or not. Because if we don't, then there's going to be more potential downside in my view, and 37.75 is going to be that next support level. So this right here is going to be that next potential level to watch for the S&P if we don't hold up that 200 simple moving average. Talking about the NASDAQ here, and NASDAQ's already starting to break down below that support, below that 200 simple moving average. So we're trading at 11,394, so now 11,400 below that level. And the next support really is going to be this right here. I'm going to extend that a little bit, and that's going to be that previous lower highs where NASDAQ has gotten rejected at quite a few times, right? So once, twice, three, four, every single time we've kind of gotten up to that level, we got rejected. This right here was a very good breakout. It was a good pivot. We pushed higher, got rejected at this resistance, kind of in line with that 300 simple moving average. And now we're starting to see a bit of a pullback even more, down 7.5%. And the next support really is going to be around 11,250. Or if we start to see a more persistent weakness and some significant downside on the markets, then we are looking at potentially down to low 10,000s again. That's going to be the October low. Talking about Apple here, and Apple here down 1.8%. So once again, kind of trading in and around that 200 simple moving average. We've kind of found ourselves in a big cluster of resistance here. So if I, remove all the lines and simply just map out a square resistance area, this is what we need to really be paying attention to. I'm going to remove all of this, but you can see how in the past we have gotten rejected here multiple times. Once for Apple over here, another time over here. And then, just not exactly at that level, but almost at that level. And then this right here, once again, it's a cluster of resistance in the 150s for Apple. And right now we're struggling at that level, not to mention the RSI and the MACD also coming down from extremely overbought levels. So not that surprising, not that new. We've seen this script play out over and over again. So next support really is going to be at 137 if Apple continues to drop off here. Talking about Amazon seeing some support validated at $91, $92. So this right here is going to be that level to watch as a support for Amazon. So very, very good support here for this company. And I think in terms of the fair value, Amazon does start to trade at reasonable, valuations. Of course, the price to earnings is always going to be in question because they're not profit oriented. But I do think that at low 90s or even in the mid 80s, I think Amazon starts to become very attractive from a DCA standpoint moving forward. Talking about Tesla, and Tesla here down 2.5%, but still a green candle. If there's anything, Tesla's momentum is still strong. There was a very low volume day, only 142 million shares traded only. It's Tesla we're talking about. 142 million shares is a low trading day for Tesla. But this right here is that cluster of resistance for Tesla right now, sitting roughly at around 206 to as much as 225. Lots of resistance at that level. We have gotten rejected at that level quite a few times for Tesla, and support level is going to stay put roughly at around 150s for this company. So That's going to be that level 153. I'm not expecting Tesla to drop all the way down to that support, but at least down to this level right here, close to 165 for Tesla. But resistance is going to stay put around here, close to it around 200s, 225, in and around that level. Talking about NVIDIA here, NVIDIA on the day was down 1.6%, but still able to validate that support at 230. So green candle on a red day. We did fill this gap maybe a little bit, but not quite as much. But this right here definitely acting as a huge support for NVIDIA. And I just don't understand NVIDIA right now. It's just, it's crazy how the valuation and the technicals and the sentiment all can stay high sustainably for some time, for so long. I mean, it's crazy. But I do think that NVIDIA is just setting themselves up for a bigger fall potentially in the future, because there's no way that this company should be trading at 21 times sales. It just doesn't make sense. So support level 230 right now, all the way down to 190. This right here is going to be that next level of support, and all the way down to that 200 simple moving average, closer to 163. Talking about advanced micro devices, so getting a bit of a rejection here. So green candle on a red day does suggest there was a lot of momentum intraday for AMD, but still getting rejected almost exactly at this level over here. That's going to be in line with that 200 SMA and this previous resistance of $78, $79 per share. And next support really is going to be 71.94. Seems like we have filled that entire gap. Maybe a very, very small amount is left over here. So that's going to be the small gap that's still left for advanced micro devices that we may need to come down and fill in eventually before we make a move back up. Talking about PayPal, and PayPal on the day was down 2%, so we filled that gap maybe just a little bit here, down 2%, 73.55. Next support really is going to be $67, $68 objectively speaking, but we do still have a gap to fill here on the downside, which can potentially bring PayPal down in the low 70s once again. But fair value wise, I think PayPal also trades at a very good valuation. Now Square, very, very interesting day for Square here, because it was a pretty insane candle. So this candle has literally no body, only wicks. We were trading as low as $73, $74, and buyers literally stepped in to push Square up 5% intraday and 4% on the day, pushing past above that support of $76. And I don't blame investors here. I think Square reported some very good numbers. They can get a lot better, of course, from a profitability standpoint. But yeah, lots of momentum coming back in for Square. Next resistance is going to be all the way up to that 300 simple moving average, closer to $90. So this right here is going to be that level to watch, and support level is going to stay put at $76 per share for this company. Talking about Meta, and Meta here on the day, down 0.96%. So again, down almost 1%, red day, but a green candle, filling that gap a little bit more. After hours was also very flat. So slowly and steadily, we kind of drifting lower, coming down to fill this gap. Resistance going to stay put at 183, very much in line with that 300 simple moving average. And we got a support sitting at 150s, kind of in line with that 200 simple moving average. So we got that 300 SMA up top, 200 SMA at the bottom. Talking about Netflix here. And Netflix continues to drop another 2%, so it has fallen off quite a bit. Resistance is going to stay put at 332, and we are seeing more momentum come in. Fair value for Netflix, obviously in the low 200s. We've got that 300 SMA sitting roughly at around $304, $305, all the way down to 276. That's going to be the next objective technical level for Netflix. Talking about Google, and Google down another 1.89%. I will be looking at cash secured puts on Google probably next week. We'll definitely look into that. If it continues to sell off, I think that would be a very good level to be watching, closer to $80, $77. Like, I would love to see what type of premiums Google is offering, and will most likely be selling a cash secured put on Google at that time, because I think it's overdue for a potential rally back up, considering how oversold we are starting to get, and it's approaching a very strong support, cluster of support levels in and around $83 to $86. So as soon as it arrives at that level, I'll either be looking at a potential swing trade idea, sharing it with all the members, or I will be looking at a cash secured put from an option standpoint, or maybe both. But there's definitely going to be a play for Google if and when it comes down to the low 80s once again. Last but not least, we got Microsoft and Shopify. And Microsoft on the day also coming down here, down 2%. Next support really is going to be in the 250s, and our fair value is going to be in the low 200s. And Microsoft also, I don't think it actually deserves to be trading at such a high multiple. I think it should be fair value-wise lower to like low 200s, closer to low 200s. But of course, sentiment's been very strong. However, the RSI and the MACD are starting to fall. So wouldn't be surprised if we do get a breakdown below this level and possibly a retest down to 218, 219 for Microsoft. And last but not least, we got Shopify, and Shopify here on the day was also green candle, but a red day. So down 4%, almost 4% on the day. This right here is going to be that resistance to watch for Shopify, 41.45, 41.50. And of course, RSI MACD also coming down. And next support really is going to be that 200 simple moving average closer to $36 per share. So bottom line is the markets here, in my opinion, getting a little bit of a reality check. And, as I said earlier, it's not going to be as easy as it looks because the market's pushing higher in the first few months doesn't mean that this is going to be sustainable. It's actually going to be the quite opposite, right? The fact that we have moved up so much in the first few months is only going to make the markets more challenging moving forward because once you've already pushed up so much, it becomes difficult to keep pushing higher even more, right? Because of how much momentum that's already driven the markets higher. And now once we start to get more macroeconomic data as we are getting with inflation, interest rate projections, FOMC, unemployment, I think that's what's going to give the markets more clarity, more certainty, and then we can kind of connect the dots together and come to a conclusion as to what will potentially happen with the markets moving forward. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. We cover fundamental analysis, technical analysis, macroeconomics, and stocks and options. So if you are interested in all those things, also check out the Discord link down in the description below. 16% discount that is available for another few days. So for 3 to 4 days, it is available, and you can take advantage of that as well. As always, happy investing, and I'll see you all in the next video.